Hello and welcome to our channel. In Canada, there are some government plans designed for retired people. In this section, I'm introducing you Registered Retirement Saving Plan, RRSP. I'm Shanam Tahiri, Financial and Management Consultant. RRSP, the history of RRSP started from 1957. In that year, government made an amendment to Tax Act that allow people to save money free of tax for their retirement. And also in this act, they made some regulation for registered retirement planning, that is for employer and employee sharing for retirement plan. Let's see how RRSP works. Any Canadian who files an income tax return and has earned income can open and contribute to RRSP. RRSP lets you invest up to 18% of your gross income. For the maximum amount is $31,560. For example, suppose that your annual income is $100,000, so you are allowed to save and invest in your RRSP $18,000 maximum. The amount of taxes associated with contribution will be refunded after your tax return. So actually, RRSP is kind of tax deferral or tax delay. What makes RRSP such a super is that when you save money today, this money grows, and in your retirement you get a good chunk of money. Suppose that a person is in 30 years old and invests only $5,000 with annual interest year 10% in RRSP. When he reaches 72 years old, he will have $320,000 in RRSP, and that is the compound interest magic. You will ultimately pay tax on the money that contribute when you withdraw your money. Remember, if you touch your RRSP and you withdraw the money from your RRSP, you have to pay taxes. But if when you are retired, because you are in low income, then the tax will be very low. So it's good option that you save money and pay less tax and get more refund, and also in future pay less taxes. The tax advantage of RRSP you can find if you look at you can find your RRSP deduction in notice of assessment. Every year after you file your tax return, government send you a notice of assessment, NOA. In notice assessment, on the part of that one is a statement of RRSP. In that statement, it shows that how much your RRSP limit, how much you can contribute for the next year. According to the statistics, most of Canadians have not contributed the full amount that they can do in RRSP. Another thing, if your income is very high, for example, your spouse is low income, then you can also invest on behalf of your wife for RRSP. And remember, if you do that one, that RRSP belongs to your spouse. not belong to you. Another advantage of RRSP is home buyer's plan. According to the law, you can use RRSP for buying your first home. The criteria is that you or your spouse didn't have any principal house during the last 4 calendar years. Then you can buy a home or build a home. But remember, when you buy a home or build a house, you have to return back the money back to RRSP. Then there is no penalty or tax penalty for your RRSP. If the budget of 2024 approved, this amount from $35,000 to $65,000 that you can withdraw for buying a house or build a house. Another option that you have for RRSP, we call it LLP, or Lifelong Learning Plan. It means that from your RRSP, you can withdraw $20,000 for studying, for going to the college, or learning any courses that you want. But you remember that you have to again return back that money to your RRSP back again. You cannot use that money, that is maximum $20,000, for education of your children. Your children is according to another plan. We call it Registered Educational Plan, or RESP. So in your notice assessment, and notice assessment is an evaluation of your tax return that Canada Revenue Agency send you every year after you file your tax. Your NOA includes dates you process your tax return, the details about how much you may owe or get a refund as a result. The NOA also give you RRSP deduction limit for that year. Your NOA is an important document and you have to keep it with your tax record. Now, after RRSP, we go to a TFSA. The tax-free saving account started in 2009 as a way to encourage people to save money. And since you pay tax on that money you put into your TFSA, you won't have to pay anything when you take the money out. So from 2009, every year it was $5,000 you can contribute. In 2015 it was $10,000. In 2024 was $7,000. If you accumulate from 2009 to 2024, you could invest $95,000 in your tax-free saving account. Remember, in tax-free saving account, suppose that last year you didn't contribute, you can carry forward. You can do the next year contribute in future. But remember, you should not contribute more than you are entitled to do it. Otherwise, you have to pay some penalty. Legal age of eligibility for tax-free saving account is 18 years old for provinces Alberta, Ontario, PEI and Quebec, or for other provinces is 19 years old. Now there is a question: transfer from your RSP. You can transfer from RRSP to tax-free saving and vice versa. But let me tell you how you can do it. If you transfer from RRSP to tax-free saving account, because it is withdrawal from your RRSP, you have to pay taxes. But if from tax-free saving account you transfer to RRSP, it is possible to do that one. If the transfer into your tax-free saving account takes place immediately, the same value will be used as the amount of contribution to the tax-free saving account. If the contribution to the tax-free saving account deferred, the amount of contribution will be free market value of the investment in the time of that contribution. You can also make in-kind contribution. For example, securities or a stock that you have in non-registered account to your TFSA, as long as the property is a qualified investment. You will consider to have disposed the property at the fair market value at the time of the contribution. Suppose that you have $10,000, you sell your stock of a company in the market, then you can contribute $10,000 in your tax-free saving account if you have that room for that. Remember, I said if you contribute more, you have penalty on that one. You have to look at your tax-free saving account, how you can find out how much you contribute, how much you room in before they send in notice of assessment. But right now, you have to go to register with CRA, my account, and through my account, you can see the statement of both your RRSP and also a statement of contribution of TFSA. So please make sure you don't contribute more than what you deserve to do that one. Otherwise, there should be a penalty and you have to pay a penalty to the government. Another thing that always they ask me about success holder. You can put somebody as a beneficiary and also your success holder. For example, your spouse, your wife, your husband, or your children as a success holder. The success holder has the same right of the owner of the RRSP or tax-free saving. So they can use it. If the person died, successor holder can use that money for any purposes that they want. So the name of success holder should be mentioned. The survivor will become the new holder of your RRSP and tax-free saving immediately after the death of original holder. In next video, I will compare between RRSP and tax-free saving account, and we will see which one have advantage over the other one. Thank you for watching. Please, if you like my video, put it like and write down your comments on the below of this video. If you have any question, I try to answer of that one. Thank you and see you in next video.